Alright, so we got to talk about my favorite precious metal. Silver. Silver. So there was one silver analyst who predicted silver's crash to $15 3 years ago, who also says a massive rally to up to $1,000 per ounce is what he was calling for next after the $15 move. Nobody else, well, I do include myself, I did say at least 2 or 3 times that back when it was in even the mid-20s, that I felt it wasn't done yet and we're going to go below 20. But I also mentioned that whenever they go for a new low, it's like they don't go past the previous low, the low, which would have been $9 and some change. It's like they just don't go, they can't, for some reason, it's like they don't go that far. They set a new low compared to where it's been, but not to where the previous real low was. At the same time, why couldn't they, right? Why couldn't they do that? It's just paper. Just these derivatives contracts, nonsense. They can put the price wherever they want. So speaking of which, gold at this moment, gold is $1,144 and silver is $15.34. This same analyst is begging and pleading, you must load the boat right now with silver. That $15 mark is his mark. It's $15.34. We haven't seen prices like that in several years. And I'm thinking back when I was lucky, right, to get silver eagles at $10 during that low period I was telling you about. And they're trying to blame it all right now. Well, all commodities prices are falling. Oil's way down, right? Gasoline prices are way down. Blah, blah, blah. So gold and silver just follow. No, they don't just follow. So, nearly 3 years ago, with silver trading at nearly $40 an ounce, and gold near all-time nominal highs, Silver Doctor's gold and silver analyst Marshall Swing shocked the precious metals community by warning that silver could crash to $15 an ounce, then rocket past $1,000 an ounce as the fiat currencies start collapsing. Fast forward to October 31st, 2014, and silver has indeed crashed to a $15 handle. It touched it and then went back into the 16s. Well, today's Wednesday, so after that Friday, and it is a solid $15.34. It's down 73 cents. There was a massive amount of short positions leading up to the end of the year. So, naturally, that's a telegraph on the powers that be part to say, go ahead and play with it, we dare you. We're just going to push the price down further. So does the only precious metals analyst who forecasts silver's crash from $50 to $15 still believe a silver moonshot past $1,000 an ounce is coming along with a full-fledged fiat currency collapse? Take heart, silver investors. The only analyst who saw this coming remains as bullish, thinking the price will go up, as ever. Marshall Swing first warned readers in March of 2012 that silver could be headed to $15 an ounce. And that story goes like this. It's about time for me to write my piece on $15 silver and $500 gold, I think. It seems quite possible, it seems quite some people get into the market not having the strength or guts to withstand the volatility, even though what drew them in was the logic and fundamentals of everything that point to gold and silver being money and wanting you, and you should get it. So it seems quite some people get into the market not having the strength to withstand the volatility, even though what drew them into the market in the first place was logic behind the precious metal story and its validity in time of hyperinflation as a store of wealth. When silver is $500 to $1,000 an ounce, those who sold at $26 will be sorry, because they will have nothing in the end after the crash. It does not matter what happens with the world's economy, like some are talking, such as Mark Faber, about commodities crashing with the slowdown in the global global economy. When the wealth of the world rushes into gold and silver, when there is nothing left. So this should be, theoretically, after the big date Lindsey Williams talked about, which was September of next year, October-ish. What's left? Everything's crashing. Paper is not worth anything. What is left to rush into? The tried and true thousands of years of history, gold and silver. This is what he's talking about. When the wealth of the world rushes into gold and silver, when there's nothing left, it will not matter that precious metals wealth might have devalued 50 to 75% during or even before the crash. It's not going to matter. Why? Because I've mentioned this before. When the powers that be want something, they don't go out and get it today. Oh, I want to go get heavily involved to make a ton of money in the oil market. Oh, oil's an all-time high. Okay, let me go get some oil contracts. No. When the powers that be want an asset, they don't even buy it at a fair market price. They don't buy it at below market value. I mean real market. They destroy the price of that asset and buy it up on the cheap. This has been going on for millennia. JP Morgan did it during the stock market crash, 1929 and 1930s. The big crash, all these banks were failing. Guess who was scooping them all up for pennies on the dollar? Buying them out for pennies on the dollar. Who bought up, was it Lehman Brothers? When they collapsed and their price, I don't know what their high stock price was, but it was probably $70, $80 or more a share. Bankruptcy collapse, 2008. Sorry, the bailout didn't happen until after you collapsed. Sorry about that, Lehman. So you don't count. You don't get included in the bailout money. But you did have some nice assets in the financial world that we wanted. So we'll give you $2 a share. Wait a minute. We were like 60, 70, 80, whatever it was, right? Just actually days ago. You're going to offer us $2 a share now. Well, you're in bankruptcy, so take it or leave it. And they had to take it. But now they're filing lawsuits later, of course, to try to recoup some of that money because they felt that there was something wrong with that whole picture. But nonetheless, what happened? They destroyed the price of the asset they wanted and then bought it up on the cheap. If you're the powers that be and you've been telling Lindsey Williams the whole time the only asset you want is gold and silver, then that means the only asset that they want is gold and silver. And while we're over here buying this whole time, they're probably sitting there. Is it time yet? No, not yet. Not till towards the end of 2014 we're going to really start smashing the price down. What if the collapse is still on September, October of 2015 when Lindsey Williams said that that's when it's supposed to happen? Let's say that's a year from now. 11 months, right? And they're doing this now to the price of precious metals. What if we haven't seen the end of these price smashings yet? And they're going, I could only pray and hope that sub $10 an ounce silver. Do you have any idea what I would do? How much silver, how many credit cards, whatever it took. I would not wait for the old tax return thing to happen. If I saw prices heading close, like touching $10 before tax, hey, tax return time yet? Nope. Get them credit cards out and on standby. Set them right next to my phone because I'm fixing to make a phone call right now. Or better yet, just go online and order it over the internet, actually. But I can only hope. And even our $15 an ounce silver is fantastic. Let me tell you. Why would they really, really smash the price? Because they want to buy it all up at the end game scenario. And when they buy it all up will be the time when everyone else starts seeing little shortages and supply delivery problems and we're delayed and, well, that's funny. Why, I haven't heard anything till recently. Well, that's because they went and bought it all up behind the scenes. The massive warehouse stores has been cleaned out. So I want to read something else in a second. So, trying to see what else he mentions. There was another article I wanted to read about this. I didn't email it to myself, but I know where it's at, so hang on. So, Harvey, Oregon, gold and silver mutiny at the ECB, European Central Bank. Today we had a huge withdrawal of gold inventory of the GLD. Once again, that's the SLV and GLD seems to be where they pick off the gold and silver they need to put the fires out as a last resort. Some people believe that they don't have any of it, period. I was one of those people that I never thought that they really had any real amount of silver, like at least what they claimed they had. And in the case GLD, the gold, same thing. But, nonetheless, today we had a huge withdrawal of gold inventory at the GLD of 2.39 tons. Inventory rests tonight at 738 tons. I'm deeply concerned that most of the gold that enters as a deposit at the COMEX are of the kilobar variety, exact multiples of 31.15 ounces. In other words, that's where they're probably getting them from. So he says this is another article. The last move before checkmate. When the Shanghai exchange runs dry out of silver, they will use the event as a legitimate checkmate excuse to revalue both gold and silver. This ties in with Dr. Jim Willey's grand gold shock event prediction. China's physical gold holdings will go up in value, all while they rake in their paper shorts on the other side. This will cause shock waves to the gold, silver, and the Forex derivative markets. Without the Shanghai physical drain on the silver supply, the mints, the COMEX, and LBMA would have defaulted by now. This is no accident. China created the loophole like a Trojan horse targeting the Achilles heel of the financial system. Silver is a sacrificial pawn right now. Wall Street took the arbitrage silver bait, and it's almost time to back up the truck and go all in. Gold and silver are about to slingshot out of the station. The game ends when Shanghai runs out of silver, real silver. A planned checkmate is now in full view. I've mentioned before the Shanghai exchange and how it was running dangerously low, and then it's running on fumes as far as physical silver. And people, myself included, are trying to figure out, speculate, where are they going to get this massive amount of silver that they need all of a sudden to replenish the tons and tons and tons and tons and tons and tons of silver that they had there. So one of the things I thought about was, well, if China was, smart, and believe me, I think they're smart, they could go to the COMEX with a massive, unprecedented delivery demand, right? Use the paper futures contract, like everyone else plays the game, and only 2 or 3% of the people actually demand delivery. The rest of them just transfer the paper to the next guy, hoping to pull a little profit and be done with it. Which is why you could see this massive fractional reserve commodities market, just like our banking system. Well, only 2 or 3% ever come and get their silver, so let's just put way more pieces of paper out there than we have silver, right? Hardly anyone ever comes and wipes out their complete bank account. They leave it in the bank. Only 2 or 3% ever, take their money out and go open an account somewhere else or whatever. So we can just lend out almost all of people's money because no one's ever coming back in practically to pull it all out. Very few people do. So what do we have? Fractional reserve banking. Now what happens when not all of them, just a bunch of people get nervous at that bank and pull their money out? Now the bank's in deep trouble because they've lent out almost all of their account holders' money. And just a few of the people coming back to get all of their money is a huge strain on that bank. So, the same thing actually applies to the commodities market. They do the same thing, and they said now where banks are levered like 9 to 1, 10 to 1, or 9 to 1 roughly, 10 to 1, something like that, where in other words they lend out 90% of your money in your account. It's pretty much lent out, gone, and they only keep 10% of the money of all their account holders, basically combined, in the bank. The other 90% of all these accounts have been lent out. That's the nature of our banking system, not just America. That is the banking system of the world today. Phenomenal idea. It has never worked in the past. It has always ended in massive defaults and problems. Therefore, why would anyone expect anything different this time? So, gold and silver, they say, are levered at least, not 9 or 10 to 1, 100 or more to 1. These paper contracts. So if that's the case, and believe me, it's the case, very, very, very few people demanding delivery of the commodities would cause technically a default. I've always been a firm believer, though, that you're not going to hear them default. Oh, the COMEX default today. No. What happens is the COMEX changes the rules effective immediately. You are no longer allowed to demand delivery of these paper futures contracts. All contracts must be settled in cash. We will settle you in cash. So they're still able to push the paper back and forth, sell the contracts as if they were real silver like they do now. Except even though you may have gotten wise and said, I'm going to demand delivery this time, or you're a large entity like China that says, we didn't ever intend on playing this paper game, but according to your rules, anyone can go buy a futures contract for any amount, and you got it. And you have to deliver it if we give you the money in full, which we will do. And when they say, here it is, here's the money, demanding delivery, give us the silver, sorry, we can't do that. Rules just changed. We only settle in cash money now. Okay, but I gave you the full amount to demand delivery, not the 10% you require for me to play the game, where you lever me, where I only have to come up with 10% of the money to play the game. You have kind of a double leveraging. In order to play with a 5,000 ounce full-size contract, futures contract, 5,000 ounces of silver, 5,000 times, let's say $10 an ounce silver, right? 5 times 10, 50. You need $50,000 to play the game. But the way this one works, all of these commodities, these futures contracts, you only need 10% of the money. So give us $10,000, put it in this account online at your favorite trading place, right? Whatever that may be. And we're going to need another $5,000 on top of that as a, quote, maintenance fee in case the price fluctuates a little bit too much. We don't want to have to give you a margin call. So in other words, give us about $15,000 out of the $50,000. And you can play with those 5,000 ounces. So if the price goes up $1, you just made $5,000 because you're playing with 5,000 ounces. So if the price of silver goes up $1, you just made $5,000. Now if the price goes down $1, you just lost $5,000, and you will be getting a margin call because that 15,000 you had in, you put in 10 plus the 5, that 5 has now been wiped out. It's gone. So we need you to replenish that 5 to go back into within our limits of where we want you to be at to trade. So give us another 5,000 if you want to play the game some more. And you may say, well, I didn't see that coming. It just fell out of the, out of the bottom of the earth, basically. I just got my butt whooped. I don't think I want to play that. So you lost your $5,000. You can take the other $10,000 out. A third of your money is now gone. And what silver do you have in your possession to show for it? Nothing. Now, if you bought $15,000 worth of silver and sat on it, it wouldn't matter what the price did, whether it went up or down. It's still sitting there in your safe or wherever you have it. If the price goes down, you're not getting a margin call. You're just saying, okay, maybe I wonder if I should buy some more. It's down and pretty good today. Let me go buy some more. Because the day is definitely coming when these prices go up. But what I was talking about with the double leverage thing, you have people who want to play these futures contracts, you only have to come up with 10% of the money. So you're already leveraged there 9-1, right? Come up with the 90% you don't need. You only need 10%. So there's that. But then the COMEX itself, which is where all these futures contracts lie within ultimately, they only have, I don't even know what the number is, maybe 1%, a few percent of the actual physical gold or silver needed to supply all of the contracts that are outstanding. So in other words, if all of the people that had paper contracts said, I'm demanding delivery, give me the gold and silver, they would not be able to do it because they are leveraged massively. So not only on top of that, then you have the people who had the futures contracts who are also massively levered. So this is far worse than the actual, our banking system where you have, that money in the account and they're lending out 90% of it, keeping the 10%, right? I mean, they're doing that too with futures contracts, but then on top of it, the actual amount for the futures contracts is leveraged even more. So what they're suggesting is if there's some large entity out there that decides, I want to go get a bunch of these futures contracts specifically to demand delivery, I'm not going to hold on to them at all. Matter of fact, the day I make the purchase of those contracts, I'm letting them know we want the full contract and I want to demand delivery. We want the silver. And where are they going to get it from? In order to replenish China's massive appetite now, China bought a bunch of it up, made huge stockpiles that have now been depleted out of the Shanghai exchange. Not fully yet. They're this close to be fully emptying the vaults of the Shanghai exchange. So where are they going to get the silver from all of a sudden? And if you're a silver miner right now, watching this happen to your product, right? You're mining a product. You're mining the silver and gold. And you're realizing how expensive it is to run the machinery, the salaries, everything that's been built up over these years, and they don't seem to go down, except gasoline prices only right now. But wait a minute, it's voting season. We know how that goes. Lower the gas prices, people will vote. Okay, then let the gas prices rise again. So now you're one of these mining companies saying, this is clearly manipulated. Now you know why the banks like JP Morgan have to have the massive lion's share of futures contracts at all times. Even when they're buying them up and then selling them off, they sell them off to their subsidiary or their pal bank, another bank, who then holds on to them. And then when it's time for them to sell them, JP Morgan's there to buy them all up. What that does is it does not allow the small guy or anybody else to really go in and buy a bunch of these futures contracts because they own most of them. If they have the lion's share, do you think JP Morgan's going to demand delivery? No. That's their tool to use to manipulate the price in the first place. So that it's their job to hold the massive amounts of these paper contracts so that no one else can come in and, quote, corner the market, so to speak, right? You can't have China come in and corner the market because JP Morgan and them own them all. But if you have a futures contract, there's always got to be a buy and sell price somewhere. So if China comes in and needs the lion's share, China is going to come in one way or the other and buy out whatever contracts are available to replenish its silver supply. And if all these bankers, like JP Morgan and friends, are holding on to these contracts, they are futures contracts, so they do expire, which means they do have to sell them off. They have to get rid of them at some certain point. So if you have a market where no one can get any of these futures contracts because China is trying to get them all strictly to get the silver out of it, the price has to rise automatically, because if there's too many buyers, which would be China, and not enough sellers, which would be JP Morgan holding on to them, that would mean the contracts would be skyrocketing out of control in price. And if JP Morgan relinquishes their positions to China so that China can buy up all the silver, price is going to rise. If they don't, price is going to rise because what little bit's there is not enough to satisfy the appetite of China, therefore too many buyers, not enough sellers. But if JP Morgan does have tons of this paper to sell, and China were to buy all of what JP Morgan could throw at them, let's face it, it's billions and billions, not a whole bunch, but billions of dollars. China has that in its back pocket, like as if it was holding on to a few $1 bills. That's what a few $billion to China is. It's all about timing, though, right? So you can clearly see China setting up to be the new world financial system like the United States was. They're opening new exchanges. They're creating these new like IMF, central bank type of things, IMF and World Bank type of things, and they're not really inviting our entities. They're starting their own. When you build a new restaurant, do you open the doors to the public and let them in when you don't have the equipment? No. You got to build the restaurant, put the equipment in there, turn it on to get the electricity going, get the gas going, get your employees hired, get everybody trained, ready, yep. Now open the doors, let's take some customers so we can deal with them. If China's becoming the new superpower, and it is, in every way, financial, military, all of it, it's going towards China. That means the old system, us, is on its way out. But you would say, well, in that example I gave, is China buying kitchen equipment and hiring employees? Well, they've opened up some new exchanges, yes. They want their own and are creating their own IMF, International Monetary Fund type of system. All of these agreements and deals they're doing with what they call the BRICS nations, Brazil, Russia, India, China, etc. They are not ever inviting anybody, nor are we even supposed to be there when they have these meetings and agreements and things like that. The word United States, come on, we want to... No. It has nothing to do with us. They don't want anything to do with us at all. Therefore, China is gearing up, right? They're getting ready to open the store, so to speak. I can't tell you when it's going to happen, when the big announcement of, the United States is in trouble, we're defaulting on our currency, we're going to revalue it, and blah, blah, blah. While we're revaluing all that crap, China and friends are now taking over as a new superpower. I don't know. According to Lindsey Williams, the big crash is going to be happening next year, late next year, 2015. It should be sometime after that, you would think. But gold and silver are the only things that are going to save you when this happens. You have to be extremely strong to sit here and say, man, I bought at 20-something dollars, I bought in the 30s, I bought even in the 40s dollar price range of silver, and to see them smashing it at $15 is so disheartening. What's going to stop them? They've been doing it this long, I might as well take my losses and leave. They know how you think, you foolish person. Do not get rid of any of your precious metals. You should be buying with both hands currently. And God forbid if the price of silver goes from 15 and change down to 10 or even below. The amount of demand, if you've already noticed, we've already broken sales records again as of October of silver. And I think it was Silver Eagle specifically. If that's not a sign that the people, lots of people, haven't woken up and understand what's happening, I don't think there is one. And if they can push the prices down even more below 15, oh my God, are you going to see demand go ape? It is going to go nuts. And I can't wait, because I'm going to be one of those ones buying, helping this little process along. And then sitting on it like I've been doing. I knew this wasn't a short-term type of thing. I've mentioned early on in my videos, this was never, ever, ever some short-term, I'm going to get rich quick type of thing. It was only to save you financially when the big collapse happens. Nothing more, nothing less. But after doing this for so many years and seeing what's going on and how long they've been able to prolong this little process from happening, lets me know that when it does happen, it's going to be brutal. And the opposite for gold and silver investors. when it happens. It has not happened. China will be backing their currency, whatever the BRICS nations decide to use ultimately, with gold and silver. Do you think the rest of the world is going to say, oh, we'd rather not use their currency, it's backed by gold and silver? I want to use the United States currency, which is backed by nothing, and they've printed more money than the entire world combined. That's where I want to go. That's the dollar I want in my near future. Do you really think it's going to go that way? No. And you are a damn fool if you think it's going to go that way and the United States will just remain king. Apparently you haven't read or understood any history of previous world empires that collapsed brutally. Every major economic and military powerhouse nation in previous history had a spectacular collapse. It never, ever, ever came back to what it once was. Something new came somewhere else. The process kind of restarted, cyclical, and someone else got the power, and then they thought they could do the same thing, but this time we'll do it right, realizing they can't do it right, and ending the same way, lying to their people. Meanwhile, don't worry about a little devaluation of the gold and silver. We're going to clip the edge of the coins to save some silver. Then we're going to add some nickel and other types of metals to the coin to water down the value, right? Because you're getting less gold and silver. That's what they did then. We're doing the same thing with the printing press. So, what else can I say? Do I look like disturbed right now that silver is $15? No. No. I am actually quite happy, and I'm hoping it goes even further. And once again, please, powers that be, let it go till tax return time. Because I know a lot of you, at the same time, would be able to take a nice little chunk of your tax return money and go buy some silver too. So I'm hoping that we all have this great opportunity, because this could very well be the final opportunity of a lifetime to get your hands on some precious metals. And as I've always mentioned, I always go with silver, not gold, because that 16-to-1 ratio of thousands of years of history, basically 16, sometimes 20-to-1 ounces of silver per 1 ounce of gold, shows that that's where it's going to have to go to in the near future. And currently it's 66 or so to 1. Man, not again. So get your silver if you don't. If you say, well, I just don't have the money, period, fine. I just don't think the price is going to explode by tax return time next year. Even though they're calling for the Chinese, to get more silver and what's going to do the COMEX. Everything's planned. If they plan on the collapse happening in September or October of next year, then that's when it's going to happen. I mean, I just couldn't see silver being depleted right now, all of a sudden, almost a year in advance of the time that they need it to happen. I don't know. Again, I don't know, but I do know I want some more silver, and you should too. Take care.